Welcome to Trading Lounge and the US stocks for Wednesday the 4th of June, and today we'll be looking at Alibaba, Goldman Sachs and Exxon. That's what we look at each Wednesday. With Goldman Sachs we probably also look at Bank of America as well. So anyway, getting into it. So with Alibaba here, we are seeing a strong move to the upside here as expected in terms of wave B, wave C here, wave 1 here, an A and a B and a C here for wave 2. And we're looking for a move to take us even higher, well, up to the 250 mark for wave 3. So in that case, we'll be looking for, well, we'll draw that out in a moment, but let's go in and have a look at it on the 4-hour chart. So we've got our wave 1 here, A wave here, B wave here, and C wave here, and now we're looking up for wave 1 and back for wave 2 here. So last time we spoke on the about this, I've just taken these off the tick chart. We're looking at about 4 entries in this beginning of the trend here. So we'll be looking for 5 waves between this low here and this high here that could come in pretty much anywhere close to this high here, around the 220 area here. We'll probably see the arrival at 220, then a small pullback, and then another little move up. So this percentage here just means that we're taking a decent size of the profits at that particular point, because we would have to leave the stop under the wave 2 area through here. So I'll leave that with each trader individually. So, and this stop here will be, the market may not even pull this far back, you know, that's the other side of the coin too. So we just don't know. But at the same time, you need to play you know, so you might want to take, you know, 80% out or 70%. And also too, we should be able to see the setup here. We'll talk about that again in a moment. We'll just go into the tick chart here. 100 ticks. We need to bring a bit more data into that. So where are we? So yeah, so this is how I was sort of seeing it here. So when we spoke last time, we were obviously down here somewhere, and we're looking to feed in through group 1 here, 1, 2 and 3 here, and then also on top of the midpoint here, and then moving to the upside. So if you're just trading this trend here, then I suggest that you get out at the 220 area here. Okay, otherwise we'll be looking for a wave 4 that can pull back 38.2%. Which can pull back down to these levels before moving higher here for this. So what we're really looking for at the 220 area through here is we're looking for a classic trading levels pattern, and the trading levels pattern pretty much looks like this here. So if this was the 220 area through here, we're looking for the arrival where we take profit, and then we just watch the reaction of the first high above the level. Sure, you can trade that up there if you want to, but the main point here is that we're looking for that first high above the level, and then we get that ABC correction, and then we're looking for support here. So in terms of the trading levels, we're looking for exiting here and then getting back in over here if we get the setup over here. We can take any of these highs here that you see come into play here, but we're really looking for that retest, you know, that deep retest into demand here before moving off again. This will save you time and money. If you try to squeeze a little bit more out of it because the market goes a little bit higher and then you sort of like hold on to your stop, it gets all a little bit messy. It doesn't matter what you do as long as you know what you're doing. So for me, it's just easier just to get out at the level and be done with it and then just wait for the setup. I mean, I've done this so many times and trying to suck a bit more out of it here and get it. This is where you lose money. Okay, you lose money in the corrections. I know that because you've made money coming up here, you've become attached and addicted to the particular stock. You think that it's your friend, but it's not, and you just need to leave the emotion on the shelf and shelve it, and bring a bit of science into it. So we're looking for a pattern like this. The pattern could also not come back into this little area here. It may just do this situation here where it sits on the level, but we still go in on this high, bring it down to this high, and so on. That's the way that we move forward on that. So I'm going to move this out of the way here, this stop, and we're going to move it back down here. So you want to be taking a decent amount off here. We'll come back to the 4-hour chart here. So I'll also put here to just, I'll just put TP for take profit. Do whatever you need to do at that particular point, and we'll pick it back up over here. It may not pull all this way down, but will certainly, when that number becomes the support with that pattern that I just mentioned. So the pattern is very simple: the arrival, the reactions in 3 waves, and then the first high above the level is in 5 waves, and then we'll see the ABC correction. And it may just stay up here somewhere and then move up from that point, and that's where we go long again at that point. Okay, so that really there, that should be just above the level there somewhere. It's more likely to be something like that. You can look at this line I've drawn through here. You can also do that as well. The point is, visually you need to see it become support. That's the trick. Okay, it's simple, but it's just a neat little trick, and everything's going quite well at that point. So the next market we're going to be looking at, just get my screens organized, so is Goldman. So GGG for Goldman Sachs. So here Warren Buffett's sort of pulling out of Goldman's and putting more money in Bank of America because it's trading higher above the old highs up here. But the way I see these here, it's pretty much the wrong time to get out of it, because whichever way you count this, and we're going to be looking at a few different counts today for this, the market's still heading higher here for this. One thing we could do while we're here, just check on this here, roughly there and there. Yeah, so that's a 61.8% just in here. So we could probably expect a bit more. I'm expecting it to kind of consolidate in there as well. So now this pattern to the upside here, I've had this as wave. Well, I've had this. What did I have it last time? Did I have it like this? Oh yeah, I had, yeah. So it's okay for me to count it as 1 and 2 and 3 and 4 and 5, but I have to say I'm having trouble counting this little bit in here, which makes a little bit of a difference here, because I'm wondering if I'm wondering a couple of things actually. First of all, I'm wondering if I copy that and put this over here, that would be the same as the S&P 500 at that point. So that would be wave 1 and 2 here, and then all of this wave 3 here, and an ABC for wave 4 here, and then having wave 5 up here. And then that would leave, if I just dull that out for a moment, just put it there, and I'll copy one of these, and I'll put this up here, and I'll just dull that out as well. We just need to talk about the banks for a little bit. So if we look at the S&P 500, we could look at this as 1 and 2 and 3 to here, and 4 to here, and then 5 waves up here for wave 5, and then from here we'd have this wave 1 here, copy that and pull that back for wave 2 here in this space. So that's a real possibility there as well. There's different ways to count this as well. If I just go to the daily chart here for a moment, this is another way to count it here as well, with wave 1 here and 2 here, and then wave 1 here and 2 here. Now for this to be a wave 3 here, I need it to be longer than wave 1 here. So in this case here, so putting this on low here, that's the length of wave 1. I'll put it there next to low of wave 2. We need to see it breach this wave to this top here for this count to be correct. So I mean, I'm expecting it to higher because we're counting up here as 1 and 2 and 3 and 4 and 5. So we're looking for that. We're looking for that push up in all of this. So we're looking at that 1, 2, 3, 4. I could pull that back a little bit here now that that's in play there. because that's where it went, and we're looking for that wave 3 to the upside. So that's a possible. So we've got this 1 and 2 possible if we line it up with the S&P 500, which is kind of important. Or we could have it like this. Now, when we get situations like this, they're all bullish patterns, so that's okay. We've got a very clear. If I wind this back in here, I mean, the good thing about Goldman's in a way is that it made this nice A, B, and C here, and a lot of the other banks, this B wave was above the previous wave 3 up here. So they had an expanded flat correction, but this one here made it very simple and obvious what we've got here. I mean, sure, this could pan out into a massive triangle, you know, in this way through here and through here over time. That's also possible. So we can't rule that out just yet either. But if we just stay with what we know, so we knew that this little move here was in 3 waves. That means we knew that this top would be taken out here. So all we have to do is start counting 5 waves up through this way here on this. And in a nutshell, that's what we've done. So on the 4-hour chart, we talked about this last time. We were looking to go long above here. You can move the stop up here. Once again, we should be looking to take a percentage in this space here. We can look at the tick chart here now in a minute for that. So just let me put that in there. Or you can take profit, whatever you need to do. I think I'm just going to take profit there. So there's probably a little bit more to go up here, and we'll look at that on the tick chart, but it can pull back into this space here. So we could look at this as wave 1 here and wave 2 here, and then wave 1 and 2 here. So there's a couple of different ways I can count this. You know, when I have a look at, I'm just going to use the trading levels charting program here. So this is on the website. This is a free charting program for members, but you've got to put your own metastock data into it. It's a metastock data feed, but basically it's good for trading stocks because you can just put that's a major trading level, medium trading levels, so whatever stock this is here. So, and then you've got minor levels. So it basically is major levels and medium levels here. So you can see that it really starts to work, and what we're looking for is to go long is support on levels and so on and so on. So it's a very nice little charting program, and it's very simple, but I like it for different reasons. I like it because I can move it around easily like this. The watch lists are really easy to click through, so I can just quickly move through stocks really quickly with it all. It's got about 100 indicators in it. Anyway, I made it up from some code that somebody had in Asia, and it works a treat, but you just need to have your data. We used to have free Yahoo data in it, but it's a little bit more difficult to access now, so I don't have that facility there, but you can still access the Yahoo data. It's just that Yahoo was bought out by Verizon, and they made it a little bit more difficult to get, but as always, there's always somebody that creates a script to pull that data, so I can put you in touch with that, or you can use your own data. So what we're looking at here, we're looking at BAC here. So this is BAC off the bottom here, and with BAC here, you can see that let's put the levels on first. So there's our support at $20, and then we put in a medium level here would be at $25. So you can start to see how helpful the levels are. And there's a free course on TradingLounge too, or one on for non-members. There's a free course, just basic details, and then there's the members video course in there as well, which is free. With this situation here, what we're just here, same as Goldman Sachs. I haven't updated it. Hasn't updated from last session's data, just end of day. So we can see we've got 1 and 2 and 3 and 4 here, and we're going up for 5. We've got one more move up there. So we're going to end up having a situation where we've got 5 waves up here like this, and then we're going to have that. Once that top comes in, we'll have that ABC pattern come in again here. So that's why we're taking profit up here. We're just going to chill out and watch how this pulls back here. This one here doesn't count up as 5 waves here because this here overlaps this one here. So it would need to be counted a little bit differently. It would need to be counted with wave 1 here and then a smaller degree wave 1 up here and smaller degree wave 2 over here. And such, and the same with this one here as well. We can just enlarge that and get another one over here. So it's good for counting Elliott too, this one. Doesn't do it for you though, and you don't want the computer doing it for you because you won't learn anything. So we could look at the count like this. If it was a bullish count, this is how we'd look at it. Otherwise, we would need to look at this as a corrective count, and the corrective count would be an A wave to here, ABC for the B wave here, but that's doesn't count very nicely in that regard. But an A wave, a B wave, and a C wave topping here, and then we would look for this to move down lower from that. That would be the A, the B, and the C. So this is also why we need to be mindful. We want to take profit here at a new high here, anywhere above the new high. We'll take the profit. We'll just allow this to come back across this level here, and then we'll look for that move to the upside. And as I mentioned, this is the pattern that we're looking at. If this is $25 here for BAC, we're looking for that first high above the level where we're taking profit this time, and then the ABC pattern here, and then we want the market to prove to us that it's positive. It needs to find tested support on that level there. Then we can move in, and we move in from the high because we have the high there. That means that the sellers, the supply is at that point there, and if we have our entry just above that, then the market has to prove to us it's strong and blow out all the supply at that side of it. So even though it's a simple pattern, there's a lot of psychology behind it. So this is the way that BAC sits as such. So we might end up tracking this as well, or we'll look at some of the EFTs on this eventually. So back to Goldman's here. It opens up an array of different ways it can be counted, and the problem is in this little structure here. I don't know if this is 1 and 2 here and 3 here and 4 here and 5 here. That's what I don't know at this point. I've got to go, but I've tried to look in there, but it's just a little bit tricky and it's just a bit short for time as well. So if anybody's got time, that would be fantastic. I should get a bit of a forum thing happening so people can all chip in and help with it all. So yeah, back to Goldman's here. Let's just go to the tick chart here and check this out here. So yeah, this has still got the old counting, but from the low here we're looking at 1 and 2 and 3 and 4 here and 5 here. So with this here we can look at this maybe as wave 1 and 2 here, 1, 2, 3 here. Is that a bit short? No, that should be all right. 5 here, so 1 and 2 and 3 and 4 and 1 and 2 and 3 and 4. So we're close to a top here. We're close enough. As soon as we're above this high here, then we can look to take profit on that, but it can go as high as, if we take that here, to the 22.20 here in that regard. So it can move up into that space higher here. So I will move that up there. And if I had to put a stop in here, then I'd put it probably just in this gap area through here, somewhere in here, below that high here at least. All right, let's move on. So the next one's Exxon. So Exxon Mobil. So let's check out that. So just on the weekly chart here, we were looking basically from wave B up here down to wave C here. So yeah, so we're looking for this wave 4 to pull back to $50 and move down from that point. So based on that, this is what we're looking at here. We've been speaking and looking at going long at this point up to the 50 and get out at the 50 major trading level, and then a move down from that point. Now, we should kind of be in line with the S&P 500 because we're looking for that to pull back as an ABC. But at the same time too, I can see another count in the bigger picture here, as I mentioned last time, which is this one here. It's a little bit odd, but I kind of like it, with wave B up here, 1 and 2 and 3 here, triangle for 4, and the drop of the 5th here. Now, I don't know if this is right or wrong. Frankly, I don't care, but all we need to do is just simply wait for this. If we get support on this level, and it'll be one of those patterns that I'm talking about, once we get a tested support, well, then we're bullish from that point. It's as simple as that, because we'd be above the 38.2% retracement level as well with this. So that's cool. I mean, the 40%, it can even go to 50%. So it doesn't matter if, and support is not when it trades above the level like that. Support's when it comes back and checks it, you know, and then you got that first high above the level and take it out at that point. So, yeah, I kind of like this. If we get support on the level, on this level, then this count will be the one that we work with. It's simple as that. Now, also too, while all this is going on, we can trade up then. I think we talked about that. Once we get here, and it'll probably go a little bit higher and all the rest of it, if it's going to spend time going sideways and all that sort of stuff through here, then we'll look to bring in another stock that we can look to trade while this is going on, and we'll just keep this one in the background a little bit. So anyway, that said, let's just cruise into the intraday 4-hour chart, and the move to the upside looks a bit like this. So last time we spoke, we looked at 1 and 2 and 3 and 4 and 5 for the A wave, and A and a B and a C here for the B wave. We talked about going long above this top here because, like the banks, that was the confirmation point there. That means that at that point, that being breached here, that tells us that this is a 3-wave move here, which is bullish corrective. And that means that because also we've got 5 waves here, that means after a correction, we'll get another 5 waves up. So I'm counting this here as wave 1 here and 2 here and 3 here coming into the level here at 50. TL5, trading level 5, and then 4 and then 5 here. That's how I'm counting it. It's possible to have this little wave 1 sitting on this one here. It's another little problem that needs to be resolved. So I'll just pop that in grey there. If anybody's got time, that would be great. And I'll just remove that. And we need to go to the tick chart to cruise into this a little bit more. So get a bit more data in here. Okay. Still want a bit more. Okay, so we've got this B wave here, and then I was looking at, this is how I'm counting it so far. So I was looking at this as wave 1 here and 2 here, and then basically wave 1 here and 2 here, and then there'll be 1 and 2. Hang on a second, just lost the plot there. Well, 1 and 2 and 3 and 4 and 5. So that's simple. So 1 and 2 and 3 and 4 and 5. For 3, then 4, then 5 here. As I mentioned, it's possible to have that over here. So I just need to do a little bit of work on that, or if somebody can help out, that's always nice. And yeah, so wave 1 here and wave 2 here. So the length of wave 1 roughly in this space here to roughly, is that off the low there? Yeah, good enough. We would want to see wave 3 here higher. So we'd want to see this push up a little bit further here. So we'd extend that up here. That can go over there. That can go there. That's it doesn't have to, wave 3 doesn't have to be longer than wave 1. It just means that wave 5 will be shorter as well. So wave 5 can be short. So it looks something like this. But the job really is, at this stage, is not to worry too much. It's just to take profit when you get to 50. I know that we didn't draw in a place to go long here, but as I mentioned before, going long from this top here, or I think I might have even mentioned it from these ones because I've got these sitting in here, so I must have had these in here. So it would have been going, you could have been going long from these ones here as well. Not that it matters, I mean, it's not a big deal, but so the next job is to count this up here, and I haven't really had time to do that. I can see 1, 2, 3, 4, 5, and 1 and 2 is cool. 1 and 2 here, and 3 and 4, and 1, 2, 3, 4, 5, so third, fourth, but still extending up. I mean, I just feel like the gap here should be in the, no, we got gaps in oil stocks in Australia at that point there too, so I'm not sure if there's any meetings going on or anything with OPEC or anything, but normally you'd see that in the third wave, so I'm wondering if this here is up for 1 and back for 2, up for 1 and back for 2, and then the third wave here. But I can see it's getting really tired here. So when you start to see a market creep like this, it hasn't created overlapping wave structures within its little structure here yet, but it's looking that way. But anyway, just pop yourself out before the level, before all the sellers come in, and just to let you know that it can go higher above the level and then fold back down for wave 4. I won't be interested in trading it that much for wave 4 and 5 here, because what we'll be waiting for will be this top to play out here, and then we'll see if it's going to be bearish or bullish, and we'll look at the bearish setups too as they play out. But in a nutshell, for the bearish, let's just say I can't draw on this side of the tick chart, so I need to draw over this side here, and we'll start looking at bearish setups for that. So move that across over to here, and so if it comes up to hit this side, comes here, goes up there for the top there, sure, you can short it up the top there. If you can count 5 waves here, then you can short it. But the thing is you don't really want to be taking, we don't know if this is going to stop. It could just keep going up through the level, and then you're basically doomed, So you could wait till you get your first little 5 waves down, which is the sensible thing to do. And then you'll get a bounce of 3 waves. And then you can just draw a line through there. And then you can look to short and then put the stop above this point here. Now, this only may get you as an A wave and a B wave and a C wave to here, and then the market could go up again from that point. So at least you haven't overdone it. But the trick is this, once you've got this 3 wave structure here, because that will come back and test the level again, and then it will drop again. So a very small position here, a very small position here, and then we need to see if we're getting 1 and 2 and 1, 2, 3, 4, 5 coming down here further and so on, and then we get an idea of where we are with this situation. So I'll leave that with you there, but less is more. I'll just leave that there for the time being. Thanks for tuning in. Sorry for such a long video, just had a bit to churn over. Cheers.